good evening, good afternoon, and good evening, everyone. Good morning, everyone, wherever you are joining in from. Welcome to our first webinar for 2026, and I will give the floor now to our president, Mr. Haytham, to welcome you all.
Thank you so much, Dr. Aram, and good morning, good afternoon, and good evening, wherever you're attending from. I just want to say Happy New Year in case we haven't met or we haven't said that. And I just wanted to say to our speaker, thank you for accepting the invitation to speak. Aaron, I have witnessed him as a speaker in the IAA UAE conference last year. And the topic today, fraud tool selection management. I think everybody who works in fraud investigation and fraud monitoring comes across once upon a time at least where they have to select a vendor or select a tool. And sometimes what happens, you end up selecting a wrong vendor or a tool, or maybe implementing transaction monitoring not as you expected. So today our speaker definitely will take you through how would you select a vendor, how would you write your requirements in terms of business, and then how do you let vendor deliver what you expected. And I'm sure this will be another insightful session I will witness today. And yeah, so I just want to hand it over to our director training to introduce the speaker. And I just want to say once again, thank you to our speaker for accepting, and wish the audience an insightful session.
Thank you, Haytham. All right, so to open our year, we are joined by a global expert who sits at the forefront of risk and innovation, Aaron Frye. Aaron is the founder and CEO of Lucid Point Consulting, a specialty firm dedicated to fraud, payment risk, and vendor management. He also serves as the Chief Strategy and Growth Officer for Money 2020, is a Forbes contributor, a Wiley author, and a relatively well-known speaker in the ACFE community. Today, Aaron will leverage his deep industry knowledge to help us master fraud tool selection and management. He will walk us through how to classify vendors, understand their organizational impact, and implement an effective selection process. So please join me in welcoming Aaron. Aaron, the floor is yours.
Dr. Aram, thank you. Haytham, thank you as well. I appreciate you all having here. Good evening to everybody there, and good morning to those who may be stateside or other parts of the world. Again, Aaron Frye, founder, CEO of Lucid Point Consulting. Very excited to be here today to present to you guys on this topic that I believe does not get enough attention. And I believe this should be a very applicable, the content should be very applicable for a lot of people here on this call. So we'll go ahead and share my screen and we'll get started here. Can everybody see my screen?
Yes.
All right, perfect. So again, today's topic on fraud tools, selection and management. We'll go ahead and teach you guys a little bit more about my firm for now. Lucid Point, again, we specialize in fraud risk management and consulting. We also offer additional services around vendor management, audit trainings tailored to fraud risk evaluations, as well as general other risk as well, like governance, risk and compliance. We also offer sales consulting for solution providers for the fraud and identity risk tools, as well as transaction monitoring. So we can do product reviews, sales cycles, as well as their customer success. Between myself and my two partners, these are the different institutions and from financial service companies that we have worked at. From GE Capital, a global commercial leasing and lending and financing company, BBVA, a global financial institution as well, SunTrust Bank, which became Truist Bank. It's a very large regional bank here in the United States. PNC Bank, another very large institution in the United States. Accenture, where one of my partners did fraud risk consulting for the financial services industry there. Scotiabank, another global institution where one of my partners has worked in Scotiabank USA as well as Scotiabank Caribbean and Scotiabank Latin America. And then American Express, Banking North America division. And then finally, a payment processor called Swivel that is the payment service provider for a little bit over 800 financial institutions. So just some of the background here that we decided to take practical industry experience and apply it into the consulting. But to get more specific into today's topic, I want to talk about my experience from the industry related to fraud vendors. So when I was at GE Capital, I was in fraud reporting and strategy, usually to identify fraud vendors across multiple lines of businesses and providing vendor controls recommendations. At this time, the commercial leasing and lending North America division I worked with was in complete infancy for fraud risk. So it was a lot of documentation to really start understanding what were the controls missing and which ones were needed to be implemented. After a couple of years at GE Capital, they sold everything off. That's when I joined SunTrust Bank, now known as Truist Bank. There I was working in fraud governance in their operations department, as well as vendor risk management. So I was performing fraud risk assessments for onboarding third-party vendors. So usually any kind of questionnaire to say, hey, we're going to utilize this third-party vendor. What are the inherent risks related to using them? What are the mitigating controls that we understand? And after we looked at those controls to mitigate, what was that residual risk to determine should we use this third-party vendor or not? And then of course, documenting a lot of process flows with vendor controls. It's one thing that a lot of FIs, financial institutions have not utilized before is making sure that within their procedures or processes, they understand like where does this vendor sit specifically within the process flow. In a format that can be delivered that anybody can understand it coming into the institution. After SunTrust Bank, I joined BBVA USA. And this was probably the growing pains of my career because I took on this role as a fraud vendor manager. I was essentially the service owner for over 35 fraud vendors for the entire enterprise for consumer banking and commercial banking. I also led RFPs, requests for purchases, for fraud projects requiring vendors. So I would have to gather the documents and requirements from each stakeholder before we would select a vendor. And of course, developing a fraud vendor dashboard with that many third-party vendors being utilized, you've got to have some kind of large pictorial view to understand the layout of who's using the tool, what's the cost to you, and a lot more information as well. And after BBVA USA, PNC Bank acquired them. And that's there where I joined the fraud governance function with the strategy group. Essentially, I was developing fraud product owner handbooks, which in short summary, I was helping the product owners develop return on investment analysis of using third-party vendors, as well as I developed another fraud vendors dashboard there as well, because some of the fraud vendors were not in the fraud strategy group from a cost center perspective. They were in another group, sometimes called authentication. So having to gather all that information was another very large task there at PNC Bank. And then finally, my last corporate role before launching my firm, Swivel the payment processor, working in payments, risk governance, and compliance. I was a stakeholder there in vendor selections for multiple compliance functions. And one of the last projects I did was developing the requirements to select a new transaction monitoring tool. The goal was to make sure that we had a tool that could have real-time payment detection for alertings, as well for AML rules and fraud risk rules all in one. So that is my background directly in fraud vendors interactions. And so what we're going to talk about here today, of course, fraud vendors and very different types and overviews of them. The fraud vendor controls locations, every entry channel, whether you're online banking or you're in person or it's over the telephone. We're going to take a look at what are all the different layers of controls that should be there in place. Then we're going to take a look at the vendor's impact internally, effective vendor selection and management processes to help protect institutions. Most importantly, understanding fourth-party vendors If you're fourth-party vendors, I'll get into the details there, but it is your third-party vendor's third-party vendor, and we'll get into more details in the presentation. And then also, most importantly too, when we are working with these vendors, sometimes vendors have very intricate language used in their contracts that can sometimes be misleading. So I want to give you guys some guidance around what are some of the protective languages for you and your companies. And of course, I'll go through some examples and then a Q&A at the end. But also for housekeeping, I will have a midway Q&A. That way, if there's any questions halfway through, I can answer some of those. You don't have to wait until the very end. So getting to the first topic here, what are fraud vendors? And fraud vendor is a person or company offering any solution or service with an intended outcome to reduce your exposure and or losses due to fraudulent behavior. So that could be consultants, that could be ID verification tools, that could be device risk tools, so just as a few examples. But we'll go through we're going to go through the three main pillars of what type of fraud vendors that would be implemented into companies. The first is through verification. So the verification controls for vendors could either be for personal identity, documents, the accounts that are being linked to your institution, and business verification, just make sure it's the true entity even exists, and then device ownership, just making sure there's some type of a name or entity match to the device that's being utilized. And then you have authentication. Sometimes these two get commingled and interchanged in terms, but they're very different because authentication is confirming that after you verify that you believe this is the right person or entity, how do we know we're actually talking to this right person? So whether it's the correct person, the correct business, is this document legitimate? Fingerprinting biometrics is another one, facial biometrics, voice biometrics, and then one that's getting more popular because there's a lot of fraud related to SIM card swaps, is really determining, is this SIM or eSIM card truly attached to the right device and the right person. And then in general, you're going to have your risk scoring. So you're going to include your fraud risk scoring. This could just be looking at the background of someone's information in databases to say what's the likelihood that this person or entity would commit fraud based on external factors. Device tokenization, making sure that an account or login information has been linked to a device and it's been seen before. And then device risk scoring, that could look at, attributes around, is this a new device? Is this is it odd for this person or entity to be reaching out from this location and trying to say, hey, what's wrong going on with this device? Or has it been seen before in fraudulent flagged alerts? And then transaction monitoring. Of course, that's your everyday, whether you're moving debit card, credit card transactions, ACH wires, cash deposits, just being able to say, hey, does this account behavior and dollar amount make sense? And then device spoofing, to understand that a little bit better, is just determining, hey, is somebody trying to mirror the IP address or the phone number linked to this account into another device? And then, of course, in the world of scams right now, the visual deep fakes videos, audio deep fake videos, as those are continuing to be more popular. A lot of third-party vendors I would say, are not keeping up with the times related to as fast as the cyber criminals are using them. So of course, you got to have a scams risk too to look at account behavior and liveliness combinations as well. So again, between verification, authentication, and risk, these are the three pillars of different types of fraud vendors that could be implemented into your companies. And most importantly, the question is, where do we place all of these vendors and controls? So in a retail setting, in person or branch, these are all the controls you would need to have layered to really have the most effective fraud risk reduction for exposure and losses. I mean, if you just look at this list, that's close to, I probably should have numbered these, but that's 12 different controls related to fraud risk. And this is just to help protect the identity and the integrity of potential losses in just one division. And financially, that's not going to be cheap at all. So we'll definitely we'll talk about return on investment analysis later on. But again, these are just for the retail and branch areas. And then you're gonna look at your online. They're gonna be very similar too. You're gonna have something a little bit more similar. The only major differences to be included are these visual deepfakes and audio deepfakes and device risk scoring. Very similar as well directly here for the mobile browser as well. Again, they're mostly pretty much the same, but again, these are a lot of controls, and software as a service seems to be sometimes very expensive. But again, sometimes you get what you pay for, and also depending on how well you're understanding which of these controls are missing in your organization, or that may not be performing to the highest level. The mobile app will be very similar to the online as well. Pretty much the exact same controls will be needed across the board. And then from your telephone entry, so your call centers and fraud operation centers, again, a few less controls from those kind of perspectives, but the major one added is right here at the very bottom is your SIM card authentication. And again, with the SIM swaps, and there's only a handful of third-party vendors out there that really do this, I would say, in an extraordinary great manner. But again, SIM card as a focus is going to be very popular, and also SIM card authentication type services may be strong enough to help you not have to utilize all the other controls in the same time at the same place. So after we understand now that, again, all the different controls that are needed at different channels, let's go ahead and start stepping into the selection process as a whole. Number one, a proof of concept, or sometimes a new version of this called a proof of value options. One thing that I've seen companies get in trouble with, I'll speak from a prior experience when I took the role as the service owner for fraud at BBVA USA. When I started to take a deep dive into all the vendors that were included, I noticed a pattern where a lot of people had implemented and selected tools without doing a proof of concept. Usually what would happen is a very senior leader would take a demonstration with maybe one of their direct reports, and they would think, hey, this tool looks and sounds great. Let's sign a contract and start implementing it. But it's usually after that point when you do turn it on, you turn the service on, and then now it's like more questions start coming up. And it's like, oh, well, if we didn't see that in the demonstration, how is it not possible here today? And again, it's the value of that proof of concept to say, hey, let's really make sure we're doing our due diligence before we select this vendor. And most importantly, there should be multiple options. Example of that is with transaction monitoring. It's a very relatively expensive tool to use and implement. And usually for a proof of concept, they might tell you, the vendor will say, well, we want to be fully integrated through an API to look at your information and your data, to see your live transactions, for our model to learn your company and your type of fraud that you tend to see. That's a very pricey and lengthy process, because you're going to spend at least a month or so to try to develop the requirements for the technical integration. Then they're going to spend probably 3 months integrating it and testing it to make sure that they can start seeing the data properly. And then they're going to probably ask you to spend about 5 more months of the model to learn your company's transactions and information. You're looking at 8 months to 9 months have gone by, and you're not even seeing the value yet of a tool. That's why there should be options to be able to say, hey, if you did a rule-based version proof of concept, especially if the current tool you're using today was rules-based only, you'll be able to see, I would say, almost the letter B grade quality option, but it'd be a lot faster. So that's just an example how there should be various options for your company to do a proof of concept. And again, most importantly, implementation requirements guidance. One thing I've realized is a lot of companies do not build out their requirements in advance of trying to select tools. They tend to try to tailor their implementation requirements when they do select a tool, which also leads things to be a little bit more rushed, because now a contract's been signed, you have a potential financial due date for a minimum transaction cost. And so a lot of details can be missed. So by far, one of the greatest ways to ever, before you select a vendor, is understand internally how does this look to implement and operationalize, not just from a technical standpoint, but even like what procedures would change, what process flows may be impacted, and who are the indirect people that would be impacted by it. So that way you understand from a perspective of what it should look like internally before you select a vendor. And then your return on investment guidance. I've seen where people have got to say, hey, maybe this tool the tool we use today is too expensive. We want to do another tool. We want to work with another tool that does the same functionality, but at a lower cost. And usually if you're basing it just on the cost, you may end up losing out on the additional benefits from the more expensive vendor. A simple example of that is when I was at one of the banks I worked at, we had two different one-time passcode related third-party vendors, the ones who send that code out for authentication, usually for high-risk transactions or account opening to help authenticate opening an account. And there was a cheaper solution in the primary use and the water flow of use cases. And then there was a more expensive one that was the backup. Well, then when a fraud ring broke out, and we were kind of curious about how are the fraudsters getting through with our one-time passcode security in place, you realize the cheaper tool that was maybe 25 cents per inquiry cheaper didn't really have that many configurations compared to the more expensive one. So the rules for the cheaper one had maybe 15 to 20, and the more expensive one had about 30 to 40. And when we ran a proof of concept with the more expensive vendor for those frauds, we noticed that 87% of them would have been captured. So sometimes you got to determine, if we're going to go cheaper, what are we going to lose and what would the impact be? That's why the value of that proof of concept before you select the change of vendor is so key, because it may end up costing you more fraud and losses later down the road for a cheaper tool. Most importantly, when you are selecting vendors, you want to, of course, have multiple vendors, essentially bidding for your business. And differentiators and competitive advantages, really understand what is the difference between those. Like in the example before, one tool had more configurations and rules options. For fraud investigation groups, I've seen where some might use a cheaper investigation tool to do due diligence on somebody before they authorize a transaction or an account to be open. But sometimes the more expensive tool may have more information. So sometimes some investigation tools are only using public data, but then sometimes the more expensive tools using public data as well as private data. So you've got to really understand what is the difference at the core between each vendor you may be selecting. And again, if you're looking at in case studies, sometimes some vendors will have case studies to be shown and say, hey, look at the results of our tool with this company. Just be sure that it's an apples to apples comparison. Make sure that if you're a financial institution, you may not want to look at the same transaction monitoring case study that they use for a different online merchant for a retail business. I've seen vendors do that directly, and it was like the moment I read the first 3 sentences of the case study, I was like, this doesn't apply to us. I'm not doubting the quality of your tool for them, but this does not apply to our business and our product offerings. So make sure to understand that some vendors are going to try to sell you on things that aren't directly related to your company. So that's part of those requirements to understand as well. And then when you're selecting these vendors, you want to determine, is it homegrown, meaning did they develop this tool in software and model themselves? Or was it sourced with a bunch of third-party vendors? Or is it a mixed solution where it's part homegrown, developed, or outsourced as well? These are very key information to understand, because if it's there are many third-party vendors that are made up essentially of multiple other third-party vendors, and then they pretty much just branded their own. So being able to understand what aspects of or what components of that third-party vendor is homegrown and sourced, it will help you have your comfort level to say, do they really understand this or not? Especially if it's outsourced for multiple components, because most third-party vendors that are reselling tools to another third-party vendor, they're not going to give you the full attributes and configuration options through the reseller. A lot of people are not aware of that because the reseller will tell you we have their tool utilized here. So you think you're getting the best thing, but you're really not. So again, the homegrown, sourced, or mixed solution understanding is very important for the selection process. And after you've fulfilled these 6 items, then you got to determine how are we going to manage this ongoing. So again, that return on investment guidance now translates into return on investment analysis. Once they are implemented, you're going to want to be able to have your financial either cost center owner, your accounting group, or your analytics group to really be able to tell the reporting aspects to say, is this tool worth it? So if we're spending $100,000 a year on a third-party vendor tool, and it's capturing $600,000 of fraud exposure that would have became losses, you're able to have a very simple confirmation of the return on investment of that tool. Your performance meetings cadence. Sometimes vendors will get you operationalized and the system's plugged in. They kind of wait around for about a month and they say, hey, great, sounds like it's working good. And they don't really give you, I would feel like, a white glove service where they're really trying to give you the greatest experience. So make sure that you understand that in the contract that there's a performance meeting cadence to say, hey, every 90 days to 120 days, we're going to have a performance understand. Is the tool working as expected? Are we satisfied internally at this point? You want to make sure that these conversations are very much ongoing, and it also holds the vendor accountable throughout the year. And then your effective communication to stakeholders. And stakeholders aren't going to be just within the fraud risk function of selecting a tool. That's going to be your different product owner leaders, your technical application management groups as well, and most importantly, your customer experience function as well, to continuously say, hey, we've implemented this tool and here are the great results. This way, let's just say somebody from finance says, hey, I want a cheaper tool. At least you've now developed more allies internally to support you to say, no, let's keep this tool. It's working great. Here's all the benefits we're seeing. We can't just look at it from a cost perspective. So by communicating outside of your function, it does develop much better internal camaraderie and partners internally. And then, if you've been with a tool or a third-party vendor for maybe say 3 years, 5 years, and you think it's going great, usually by that time, the third-party vendor will end up having some type of release of an updated version. Make sure that when they do this, I call it the refresh proof of concept or proof of value, before you sign up to take on their enhanced version, do another proof of concept. This will not impact your live data in production, but most importantly, you're able to determine what the new lift or the new qualities look like, which also ties back into that return on investment analysis, even using the new proof of concept version. And then you guys will be able to negotiate potentially contract timing and financials. And then, of course, that would probably take a little bit of technical application management functions ability to be able to say, hey, if we make these changes, what does it look like for us internally, technically? So again, being able to understand that on your ongoing management is important. And then making sure that when you do have multiple third-party vendors implemented, you have a tiered criticality documentation. So you're going to say, some third-party vendors are extremely critical just for operations, for example, like transaction monitoring. And then you're going to have ones that are important, but they're not going to stop the day-to-day operations, like a due diligence investigations tool. So being able to understand how critical they are to each process for your company to operate. And then you're going to want to have applicable meetings, and I would say meeting cadence should increase based on the higher tiered criticality of a third-party vendor. That way, you're ongoing and you're managing it properly. And this one, number 6, it's very rare to find, but it's the creation of a fraud vendor management team. And I call a fraud vendor management team. Most companies have a vendor management function of some sort. Sometimes it's tied directly into procurement or a sourcing or a third-party vendor management group or a third-party risk management group. But fraud vendors are so unique because there's no regulations really around the world that says if you follow these steps, and use these types of vendors, you're going to be successful. If you went to just go ahead and did some research online about the volume of different fraud vendors for the same types of controls, there's really no success metric to state that these are the best tools. Even though people have won awards, does not confirm how great the tool is. I can speak firsthand on a couple of vendors I know who have won awards that really didn't have the best tool. But to have somebody embedded in your fraud risk function whose day-to-day job is to make sure that the vendors you're using for anti-fraud risk and management is working for everyone's favor, from your analytics groups that are the people writing the rules and monitoring the alert volume, combined with your fraud operations and investigations group to really make sure everyone is being satisfied with the tool. It's a full-time job. I can speak from it directly when I was at BBVA USA. Also, it manages the relationship between your company and the third-party vendor effectively, because sometimes if you're an end user of a tool from analytics or operations and you're supposed to manage the relationship with a vendor, you may miss an email. You may not have time or find time to get the meeting you want because you're overwhelmed in work with reviewing rules and trying to make changes in processes. So again, having this function that's dedicated to fraud vendors, trust me, it enhances the relationship between the vendors and your institution as well. That's the summary here for your selection process and ongoing management. And of course, you got to understand that impact of these fraud vendors across your enterprise. Most importantly, your fraud management function. That's going to be your operations group, the team that's reviewing the initial alerts or taking in those call center calls directly and doing investigations. Then you're going to have your strategy group, the ones that are trying to prioritize and understand what projects should be at the top priority and what changes should happen to enhance the fraud risk program. And then your second line of defense, the governance function, impacts them directly, the ones that are making sure your policies and procedures are being abided by and trying to find gaps in your processes as well to give direction to the first line. And then your analytics and reporting group, the people that are extracting the data, looking at those losses, and reporting it out to the right people. And the right people is essentially almost the entire enterprise. I know sometimes fraud, analytics, and reporting groups stay a little bit siloed there, but with these third-party vendors, the reporting needs to get external outside of just the fraud function. And so the next group there that's most important for the impact is your technology. So that's your solution architects. If you're not familiar with what they do, they essentially create a digital world where the connectivity occurs for your fraud tools to be connected to your institution or enterprise, and then your developers as well. They have to understand, the quality of the coding types that are expected to connect throughout the solution architects world they develop between your institution and the vendor. And then once your tool is essentially plugged in and operating, then your application management group. They've got to understand what servers did they connect these tools to, and do they have capacity to manage the volume of transactions or alerts that are coming through. So again, that's the impact to the technology groups just from these fraud vendors. And then most importantly as well, the business strategy people. So your product owners or line of business owners, the executives over the product are going to say, hey, like if we do implement this third-party tool, what's the impact going to be to my business? Well, how much growth will be limited? Or, and another better way to phrase it is, what's the integrity of my growth going to look like with this fraud vendor being implemented? Also, your customer experience group. Customer experience functions, I have seen directly, and I've heard from clients and prospects as well, that if the customer experience function does not understand the impact of this tool from this fraud vendor, you may not be able to go live and operate it. So again, making sure that you have partners in customer experience functions with your product line of business leaders is important. As well as number 3 is understanding your marketing campaigns. For example, you may say, hey, we want to implement a new transaction monitoring or a new ID verification tool. Let's just say you want to do it in the month of February. Well, you should understand your marketing campaigns for products at your company, because your marketing group may start having a campaign either directly in February or March. So you want to understand is like, hey, when are we going to expect to see a higher spike in alerts or volume? For one, you get to prepare operationally wise. But again, these third-party vendors will have an impact there. So understanding the marketing campaigns at your companies is crucial. That way, if your vendors are understanding, hey, why are we seeing a spike in alerts? They might think something's going on, but they might know it's just regular day business as usual marketing. Another key impacted division is your procurement function. So that's your vendor management, vendor risk management, and legal. Some companies commingle vendor management and vendor risk management. Some companies have them separate. For those who are not as familiar with them being separate, your vendor management group is kind of the business as usual. The tool's been plugged in, and they might check to say, is this fraud vendor's financial health still great? Is there any adverse media around them through their ongoing processing and reviewing of the tool? Then your vendor risk management group, usually they're the ones doing the most due diligence during the onboarding stage. So after the NDA is signed and the contract is being submitted to select this tool, they're doing the deep dives around cybersecurity, financial health, adverse media effects in the moment, as well as legal risk as well. Like, are they tied to different, potentially sanctioned companies overseas? And then, of course, your legal function as well. Extremely important to understand that. Is there great communication with legal, understand what the tool is, what it's supposed to do, and does it make sense? So again, these are extremely impacted groups, and legal can tie up just about everything you want. So you definitely want legal on your side when you are selecting these vendors. And then, of course, when it comes to the dollars being spent, your finance group. So it's your financial planning and analysis group to understand, hey, if we're selecting this new tool, what is the expected cost? Is there a seasonality of spikes and alerts, sometimes around the holidays where there's more transactions occurring? Being able to help forecast costs for them with those to those accounting groups is very important. And most importantly, the cost center owner should be able to understand, hey, if this vendor is going to be utilized for X amount of years, we should have a purchase order in our system for finances at that point. So again, these are all the different pillars of impacts that these fraud vendors really have, which is why on the last slide there around the fraud vendor management type of role, that person's job is to basically keep everybody here happy and on the same page. And you can see now why that is a full-time job. I know I spoke for quite a bit. This is the part where I do the midway Q&A. Any questions so far or thoughts on the content so far before I finish up into the last few slides? I'll give you guys a couple minutes for that.
Aaron, there is no specific question, but I have a question for you. Today, as you stated, there are multiple vendors who are offering the fraud monitoring system, transaction monitoring system, and all of them claim to have AI components in their transaction monitorings. And sometimes you buy those claims, and because for you, AI might be something new, especially if the team is not new to the technology or not aware of the AI different components. How do you handle those, especially if proof of concept does not help?
Yeah.
This is my first question. And then the second question, although this session is about vendor selection, would you prefer to have transaction monitoring in-house, built in, or outsourced for a vendor, and why? And what would be the challenges if you have both?
Absolutely. So to answer the first question, yes, a lot of third-party vendors are claiming AI as a part of their tool. Let's just to level set, AI has been a part of many fraud risk tools for a long time. The phrase was simply machine learning. The AI aspect is just the way it's communicated back to you. And that's really the only difference that's changed, is that now the AI component is communicating it maybe a little bit more efficiently or effectively, being able to give you summaries of information in a shorter amount of time that usually would have took somebody to create a code to pull that same data out. So AI is simply making the fraud tools, whatever they are for identity verification or transaction monitoring or facial biometrics, it's just giving you a summary a little bit faster. That's more digestible and can help your initial operations and alert groups and strategy teams work a little bit faster. So a lot of them are going to claim AI is used, but you're going to also have to understand which one of the questions I had is this AI tool, is this homegrown? Is it outsourced, or is it a mix? So with the AI being a buzzword, again, it's more so just understanding from your requirements developed to say, if we're going to utilize this tool, how much more efficient are we going to be? And that's where the AI component comes in, usually to help with efficiency. So that's what you got to focus on, because to your point, yeah, the proof of concept is going to have the results, but the AI component is just how it's being communicated back to you in a timely manner. So that's my answer to the first question. And then to the second question, around transaction monitoring tools, is it better to have them built in-house or outsourced? I would have said probably 15 years ago, in-house would be the better way to go. Today, I would probably say third-party vendor sourced. In-house is great, but the key is it's usually a little bit more expensive to manage an in-house transaction monitoring tool, especially if you're trying to adapt to utilizing third-party vendors, especially if your in-house developed tool is on-prem, meaning on-premise of your servers internally, because a lot of companies who usually develop their own tools don't like to have it in a cloud system. And when things are on-prem, the drawback is it takes time to get to the roadmap for your technical group to make changes. Whereas with third-party vendors that are usually going to be outsourced into the cloud service of some sort, they're much more nimble to be able to make configuration changes. Plus, if a tool is not working, let's just say your transaction monitoring tool in-house isn't working as expected after 5 years, 6 years, you're going to have a new expensive technology project to be able to make the changes without disrupting your operations. Whereas with a third-party vendor, if you say, hey, we're not a fan of this outsourced tool, we can now go look at another third-party vendor. We could implement them side by side and have a live comparison of an existing tool that you're not a fan of with a new tool as well. And you're able to have a direct proof of concept comparison to state, yep, this new tool is better. Well, now we know what date we can plan to turn off or move over to the other tool in that sense. So that's the kind of the pros and cons and drawbacks of each one. The only one about the drawbacks of the third-party source is conceptually, to a certain point, you are at the mercy of their pricing. But I'm a big, which I talk about later on in the presentation, though, that's where your performance contractual obligations are basically going to have to be included. So yeah, those are my answers to those two questions. So to continue here in the presentation here, let's discuss fourth-party vendors. And again, as I mentioned before, the fourth-party vendor is your third-party vendors being utilized in their solution provided to your company. The thing is, a lot of companies do not volunteer information about fourth-party vendors. Sometimes they do, depending on the criticality level that you must know about, or sometimes the reseller is legally obligated to acknowledge that they're using this company. So I've seen those contracts before too, working with a couple vendors. But understanding those fourth-party vendors that are making that third-party vendor operate. And the key is you have to really question your third-party vendors. Some of the first key questions would be the question is, do they use fourth-party vendors? Ask them directly, flat out. Don't hesitate. And usually the quality of their sales group and their confidence to be able to articulate what fourth party vendors they're using and in what capacity should be able to help kind of give you your own assessment to say, are they a quality vendor that really understands this? Also understanding not just are you using fourth party vendors, asking them, well, what data is the fourth party vendor using in your tool? And what do they have access to? Because again, that means you don't have a contract with them, but yet they have access to your information. And then importantly, related to the access to your information, asking them, is the fourth party vendor storing any of your information? There's a lot of laws and regulations by different countries or different states around this information sharing or being utilized. So again, you want to understand if they're accessing it and storing it. And then of course, what are the names of these fourth party vendors? If they're not names you've ever heard of before, or maybe your colleagues haven't, that's when you might want to go ahead and do your own, just a little bit of due diligence background yourself to say, hey, let me look into this fourth party vendor in the meantime. And understanding which component of the third party vendor service is that fourth party vendor utilizing as well. Just to make sure you understand from a criticality perspective, is this fourth party vendor directly communicating to our customers or clients? That's a huge difference between one who's just running like maybe the machine learning in the background to help develop a model. So you got to understand what they're doing. Then also, what is that third party vendor's continuity plan if their fourth party vendor happens to no longer exist? Whether it could be financially, or there could be lawsuits or adverse media, or if the third party vendor just ended up, say we had a cybersecurity breach and if someone's got a grip on their fourth party vendors data and information, now the tool doesn't work. Like, what is that third party vendor's plan? And they should be able to articulate that to say, you know, and if they don't have a backup vendor to utilize or to seamlessly flow into their model or tool, they should be able to articulate why they're confident to not have a backup plan, essentially. So again, these are just some of the questions you're going to want to ask your third party vendors in that sense. And then of course, when you're working with these third party vendors and their fourth party vendors, this is where you got to really protect yourself from a contractual language perspective. So I want to highlight some different phrases or scenarios here in potential risk, and then I'm going to provide mitigating language that you could put into your contracts with your legal function to do. And the reason why I have such an experience about this is due to certain errors that occurred with vendors in the past. My manager used to tell me, well, hey, you need to go tell legal to put this in the contract. And I used to laugh and say, well, shouldn't legal already know that? And then my boss would tell me, she would ask me, does legal know fraud? And I would just laugh. And I was like, I see your point. So I've realized I've amended more than like 75 different contracts in languages. So that's where some of this experience is coming from. So again, if it's an unknown fourth party vendor within their solution, and you're like, hey, they admit they use fourth party vendors, but you look at the contract today or the initial contract and they don't have it listed, that's when you get the demand or request, hey, please include your fourth party's entity names and components of the tool. Some companies will be hesitant because some may claim they have a no communication clause with that fourth party vendor. So they technically can't say it, is what they may tell you. To how to prove that, don't really know, but most importantly, they should at least acknowledge that they're using some fourth party vendor and at least like what country that their headquarters is out of. And you could put that in the contract too to understand the component. That way you understand from a data risk perspective as a whole or regional risk perspective where this fourth party vendor is operating out of. Another one is like price increases post-service sunset. So for example, by saying this phrase post-service sunset, that's where a company might say, hey, you guys have been on version 2.0 for 10 years of our tool. Version 2.0, we're now on version 4.0. So we're gonna no longer utilize the 2.0 version. And if you stay on it, we're gonna have to increase the pricing of your tool. So again, to make sure that if you don't want to be caught off guard with a financial increase unexpectedly, locking in your price points for those first years of a sunset version. That way you have some type of obligation to state, hey, if you do sunset this tool, our pricing will not change. And that also helps your company's technology group and fraud strategy group determine and state, hey, we have one more year of this pricing before it's going to go up drastically. We need to understand, are we going to go to the refresh version of this tool, or are we going to look at another vendor? So again, at least it gives that indication internally and reminder to stay focused on prioritizing your finances for your next upgraded tool or a new tool. And then revenue loss during campaigns due to system outage. This is a very firsthand experience moment. So example, this one-time passcode vendor I've worked with before, one day during marketing campaigns, the entire line of businesses lending product group said, hey, we've been campaigning for a month, 3 weeks, about 3 weeks into it, we haven't had one completed application. What's going on? And they realized that the fourth party vendor component of the third party vendor, after we spoke to them, they were only sending out 5 digits when their authentication code needed 6 digits. And it ended up being an error within the fourth party vendor, and the third party vendor didn't catch it. So of course they gave us the cost of those inquiries reimbursed, but now you have a line of business leader that said, hey, I would have had maybe $8 million in lending for my business to grow. So what's the financial penalty? And if you don't have anything in the contract around their service system not working as expected and causing a loss of revenue directly, that's measurable, that's where you can put that language contractually in there to protect yourselves as a whole financially. And it would make your line of business, product owners, business partners understand that, hey, at least I know the fraud group is really supporting me at the same time as maybe slowing down the growth with the tool, but at least they're trying to protect me as well. And then invoicings for non-implemented services. So sometimes a company may sign a contract and start, hey, they might say the monthly minimum commitment is $10,000 per month. Well, you know it's going to take you maybe at least 90 to 120 days to even technically implement this tool. So you want to make sure your language states that billing will only commence after the service is fully implemented or integrated. That way you're able to protect yourself financially while you're waiting for the tool to be operationalized. Of course, if there's unresponsive customer support or account managing during urgent matters, you definitely want to make sure that those service level agreements with response times are included in those contracts. Some companies automatically put the language there internally. Some don't have it very clear, so you just want to make sure it's very clearly defined to protect yourself. That way too, you could even put a performance clause that states that if your company is very unsupportive as needed, you may be able to exit the contract without penalty. That way you protect yourselves there as well. Also, underperforming services, providing a low return on investment. So again, if you've done a proof of concept and you're able to expect a certain financial return on investment of utilizing this tool, say for every dollar you spend with this tool, it should capture $5 of fraud exposure and losses. But now if you're seeing that this tool is only catching $2 and not $5 worth, having those metrics included in your language are very important to be able to protect yourselves. So again, these are just some of the options here around what does the contract say to protect yourselves. I know we've got about 4 minutes left. We'll quickly go through a couple of these examples. I've had a regional bank and fraudsters were using account takeovers through the telephone channel. Some of the missing vendors that were not included, there was no device spoofing. They couldn't tell that the number was being sent to another device. Voice biometrics, there was no voice match being captured as well as some of these. It might have been a male's voice or expected male's voice on a female's account having access to it. And then account analytics, really the behavior to say, does this transaction make sense? Or does this account change make sense? If someone's made changes to their account online for the entire career or the entire length of the relationship with that institution, why would they all of a sudden be calling in over the phone to make an account change? And then there was no SIM or eSIM verification as well in this scenario. Another one is a missing address verification. Another regional bank, fraudsters were changing addresses and ordering products, credit cards, and checks. What was missing was one, identity verification. They weren't requiring them to submit anything at all to make the change. Two, the address change verification as well. There was no name match of the new address at all. It was just looking in the system to state that the address is a physical location, but there was no name match to saying that this person's name is on this new address. And then device risk scoring too, when they did a deeper dive later on, they realized some of the devices were coming out of a sanctioned country. And then repeat fraudsters that return for more. This was a national bank here in the United States. Fraudsters were able to keep reapplying for loans through their institution. It was interesting. There was account behavior wasn't making sense. Plus the devices that were being utilized again were in a sanctioned country. These are just a few quick examples about how to put those controls and where they could be sitting at for different anti-fraud scenarios. So here now with a couple minutes left, just a summary reminder is a fraud vendor management program tailored for your company will create efficiency, clarity, and accountability, and it will save you guys money as well. Here's my Q&A. That's a QR code to my LinkedIn, my email for communications to reach out. Any couple questions by chance here at the end with a minute left? If no questions, I don't see any in the chat, but I appreciate you guys' time here this evening. Thank you guys for having me.
Thanks, Aaron. I'll just wait for like a minute if there are any questions coming in.
All right.
Okay, so there is one question.
Okay.
Says, you have mentioned that the market is quite crowded. Is there any specific tool that you would recommend for an anti-fraud professional from your experience?
There are some vendors that are better than others. I would need to know which type of tool you're looking for, and also what financial products or transactions related you're looking for as well. But yeah, gladly reach out to me. I'll be very open to having discussions about vendors and which ones are some of the better ones I've seen, witnessed, and what are some of the new and upcoming ones, as well as some of the newer tools actually are much better than some of the older legacy third-party vendors. So I've taken a lot of demos, and again, I've been the point of contact for more than 60 different fraud vendors between all my work, and I've learned about a lot of new ones since I've launched my firm in the last 2 years. So yes, gladly would like to reach out directly to talk about vendors in the market.
Okay, so there is another question, and I'm assuming you will have a similar answer. It says, if there are any tools to detect fraud before it happens, before it happens. Yes. So I'm assuming a similar answer.
Yeah, it'll be a similar answer for that one, just because, there's a lot more for the detection in advance of fraud. So it just depends on a lot of it should be in real-time transaction monitoring. A lot of it should also be around, again, the layer of controls you have for account opening or accessing existing accounts. So there's a lot of tools there that are in the market that we could discuss. Just a little bit.
Okay, one more question. It says, do such tools offer a loss guarantee or shared liability model?
Not many. What you would be able to potentially put in a contract is and it depends on the service. So especially if you're outsourcing them to make the decisions for your alert decisioning, essentially fraud risk as a service type of offering, you could say up to a certain dollar amount of losses. If it goes over this dollar amount, your company's liable for the losses. I've seen that performance put in different contracts depending on how you're using those third-party vendors.
Okay. Great. So due to the time constraint, I think we'll wrap up here. So I once again would like to extend a sincere thank you to our speaker, Aaron Frye, for sharing such valuable insights on navigating the complex world of fraud tools. We also owe a special gratitude to our strategic partner, the College of Banking and Financial Studies, for their sponsorship and support of the ACFE Oman chapter. Thank you to our dedicated chapter board for organizing this event. And finally, thank you to all of the audience for joining us and engaging in the discussion. We look forward to seeing you at our next session, and have a great evening or day ahead. Thank you, Aaron.
Thank you, everybody. Appreciate it.
Thank you so much, Mr. Aaron.
Oh, thank you. No, it was great. I hope you guys enjoyed it and enjoyed a lot of the content. Hopefully everyone felt like it was very